So, on the surface, gaming giant NetEase had, well, an absolutely incredible quarter. We're talking hit games, huge player numbers, booming franchises, the works. But when their Q2 earnings report actually came out, the market's reaction just didn't seem to make any sense. In this explainer, we're going to dig into those numbers and try to solve the mystery of NetEase's hit game paradox.
So, what was the market seeing that seemed so off? Well, the story of NetEase's Q2 is really a tale of two completely different headlines, and they were happening at the exact same time.
Okay, so on one side, you have this summer of absolute blockbusters, right? New games were launching and just crushing it, topping the charts, and their classic, older games were somehow stronger than ever. But then, on the other side, the second that earnings report was released, the stock took an immediate 6% nosedive in pre-market trading. It's a real head-scratcher.
And that right there is the big question we're trying to answer. With all that success, why on earth was the initial reaction so negative? What were investors seeing in the financial details that completely overshadowed all that good news? Let's get into it.
To solve this little puzzle, we have to go right to the source, the earnings report itself. At the end of the day, the market is a numbers game, and the first clues are always right there in those headline figures.
And this is where the plot really starts to thicken. Look at this, it's a split decision. On earnings per share, or EPS, NetEase was perfectly in line with what Wall Street was expecting. Right on the money. No surprises there. But then you look at revenue. They brought in a massive $3.89 billion, which sounds great, but it was just shy of the $3.95 billion analysts were hoping for.
And that $60 million gap, that is our first major clue. Now you might think it's only a 1.5% miss, but in the world of high-stakes investing, any miss on top-line revenue, the total sales number, is a bit of a red flag. It kind of suggests that even with all those hit games, the company's main sales engine wasn't firing on all cylinders.
And you can see right here just how ridiculously dominant gaming is for NetEase. We're talking almost 82% of their total revenue comes from games. This just makes the mystery even deeper, right? If the biggest part of your business, by far, is absolutely booming, how do you still miss your overall target? Well, to answer that, we have to look inside the gaming division.
Because despite that top-line miss for the whole company, the story inside the gaming segment was, overwhelmingly positive. This is where that whole paradox thing really comes into focus. Just look at this timeline. They were on an absolute tear. From FragPunk getting traction globally in April, to City Dynasty hitting #1 in May, and the Marvel Mystic Mayhem launch in June getting over 1 million players. And then in July, a huge update sent their game Once Human soaring up the Steam charts. It was just a relentless pace of success, month after month.
And it wasn't just the new games. This number is it's incredible. Fantasy Westward Journey Online, a game that is 22 years old, hit a new all-time peak of nearly 3 million people playing at the exact same time. That just shows their phenomenal ability to operate and grow these evergreen franchises over decades. It's wild.
And the good news just kept on coming. Their big partnership with Blizzard is gaining momentum, with a super highly anticipated server for World of Warcraft on the way. Their epic Where Wings Meet has over 40 million players, and other franchises like Identity V just keep breaking their own revenue records, quarter after quarter. The gaming division was, simply put, firing on all cylinders.
Okay, so we've established the gaming division was an absolute powerhouse. That confirms one side of our story, but it leaves a really big question. If gaming was so strong, where did that revenue miss actually come from? For that, we've got to look beyond the core games.
And here it is. This is the other side of the coin. While the games segment posted that powerful 13.7% growth, the other segments were a very mixed bag. UDAO, their education business, did grow, but cloud music actually shrank by 3.5%, and their innovative businesses segment dropped by nearly 18%. Ouch!
So there's our second major clue. That powerhouse performance from gaming was getting dragged down by the weakness in these smaller divisions. That drag was just enough to pull the company's total revenue number below what the analysts were expecting.
All right, so now we have all the pieces. We know what caused that initial dip, but what about the recovery? Because the stock didn't stay down. By the end of the trading day, it had clawed back most of its losses. So let's look at why that happened.
This is where the long-term view really comes into play. As CEO William Ding put it, their whole focus is on high-impact, genre-defining games. So investors who looked past that short-term revenue miss saw this long-term strategy, a focus on quality that builds real sustainable value, even if there are a few soft spots in one quarter.
Investors also saw this really positive flywheel in motion. The company is actively buying back its own stock and paying out dividends. That screams financial strength. They improved their corporate governance, adding a new independent director. And they've got this rich pipeline of new games coming, all part of a very clear strategy to become a truly global player. These are all signs of a healthy, well-run company.
So there you have it. The mystery is solved. The initial dip was a classic market knee-jerk reaction to that top-line revenue miss, and it was made worse by the weakness in those non-gaming divisions. But the recovery was driven by smarter investors looking past that headline and seeing the fundamental strength. Incredible gaming growth, disciplined spending, strong cash flow, and a really clear vision for the future.
So now that we've kind of explained the paradox of Q2, the final question is pretty simple. What's next? What should we all be watching for on the road ahead for NetEase? Well, there are several major catalysts right on the horizon. The global launches for titles like Sword of Justice could be absolutely huge. The continued growth of their Marvel games is going to be critical. But the one event that has everyone watching is the World of Warcraft relaunch in China this November. That's expected to be a massive cultural and financial moment.
And really, all of this points to the single biggest question for NetEase's future. The company has proven it can dominate in China and launch massive global hits. But can it make that final leap from being a China-centric hitmaker to becoming a truly global operator of intellectual property? That transformation, that's the big story to watch.